All right, what's up, guys? Welcome back here for another recap video. Today, finishing green on a somewhat slow day today, up 439 and 22 cents. So back in the green on the week. Yesterday was down 200 bucks, and Monday was up about 90 bucks, small green. So I was slightly red on the week until today. I did. I was able to get some profits on IBIO, which I can showcase one trade for you today. And LIXT right out of the gates. Some very nice kind of opening range scalping that I was able to pull out. Actually, I was up 150 bucks, and then I gave it back to about zero, and then I got back up to 150 bucks. And then stopped there because we did try to get the red to green. Well, we did get the red to green, but we failed at the highs, and this is just kind of sucky that we were not able to hold the highs and continue higher. Even though this did have news on it, it was a low float, did have potential, but I guess the momentum is still not there in the market. The momentum's still not there. IBIO, this one again, very, very choppy, but I was able to secure some small profits here on the first push, kind of buying the pullback here and then selling into the pop. I wasn't able to get the initial breakout, but I was able to get a small pullback. And then in this candle here, we had a small pullback, and then we ripped to the high to 299 and then rejected and flushed all the way down. Which is not what you like to see here for momentum. But we did end up curling back up, and I was able to get some nice, good trades right in this area, which I can showcase. And then we dipped down again for a higher low, and then reclaimed, now looking for the break of the high of $3. So we topped out at 299, and we made a higher low, increasing volume coming into the high of 299. But the timing was so bad on my end. I just could not get a good timing on IBIO with this third test of the highs. And I had to let it go without me. I was able to get some small profits, and then giving it back and just not being able to really get the price action down. It did kind of go without me, but then, flushed right back down. And then we curl up again, attempt the highs, and flush right back down. And this is some tough action, especially for momentum traders, especially for breakout traders. For breakout traders, this is a nightmare. Focusing on the dips on this type of price action is where you're going to be making the good money. But yeah, breakout trading, momentum trading is definitely not in season right now. It's not in season. So we have to learn to adapt. But we did I didn't trade. I was done after this flush. I walked away, and I was like, all right, whatever, 400 bucks. It's a decent day. I'm back to green on the week. Just looking to survive, kind of coast until the market comes back. That's my goal, just to kind of coast, small green, small red. It's all good until momentum starts to come in, and then we can really push it. Then we can push it again. But we did get a midday pop here in IBIO. I just saw this sitting down here. The price action doesn't look that clean, so I know I didn't miss out on that much. Volume, okay, 500,000 to 1 million. It does look a little choppy. Who knows if I would have been green? But we did get another, breakout of the highs, and kind of very choppy at the highs. Very choppy as the highs. Yeah, I'm not sure if I would have done well in this price action, but it is kind of still holding a trend. So who knows how this is going to turn out tomorrow, if this is going to hold up. Usually when the momentum starts to pick up, it's usually because of a multi-day runner. A lot of the times the momentum shifts once you get the one stock that gaps up and then rejects the lows. It is stubborn to break down. Once you get that, a low float stock that gaps up and just stubborn to the downside, just does not want to fade, and then for 2 or 3 days it doesn't want to fade, and then it finally starts breaking new highs on a multi-day breakout, and that's when you really start to see a shift in momentum. So who knows when that stock will come? It could be IBIO for all I know. It could be Kazoo. Kazoo has been ripping. CZOO. This one has been on like a multi-day run too. So, you know, once you start seeing stuff like this, it definitely is a sign that momentum's maybe starting to come back in. Because yesterday it looks like we opened up at $3, and in 2 days we're up 230%, up to $13. I guess that's not that big of a gap, but you know, if this starts to continually hold highs and just does not want to fade, you know, maybe we get a consolidation here and we don't break below 10 and we kind of just hold a range. We kind of just hold a range and then we curl up again and break 13, or we curl up again and break the next high. That's when you'll start to see a nice pull away. Maybe it rips up, you know, a total of 500%. You know, maybe it starts to break into 20s and just, you know, doesn't want to fade, and that's when you'll see a lot of the other low float stocks will start to rip. So who knows, you know, if Kazoo could be the beginning of something bigger, or IBIO. You know, I'd really like to see some momentum start to come back into the markets. But yeah, it's definitely a smart move for me to walk away after this rejection. I kind of had a feeling this was going to reject, and I didn't really like anything else. And I want to maintain, you know, a conservative attitude until I see something change in the market. You know, it's okay to be, you know, treading water here, either small green or small red, you know, maybe, you know, some slow growth. You know, if you're a consistently profitable trader, even in these types of markets, you should still be green at the end of a week or at the end of a month. Because, I mean, it's normal to have red weeks, of course, but I guess on the end of the month, you know, even on slow months, you can still adapt. You can still adapt even to this type of price action and still pull out money in the market. So, you know, even if you can just kind of inch up a little bit in your P&L, inch up, that's definitely, you know, solid. But, you know, maintaining a conservative attitude until the market starts to heat up, and then, you know, start slinging the size again. Start slinging the size and shooting for bigger days than I've ever had. That's sort of the goal here. Let's take a look here at that one trade here I wanted to show you guys. So IBIO kind of getting that double top here. I was anticipating this was going to break 299, but as of right now, I'm up $250. I try to catch the dip there, 89.5, and I should be out. I could have got out there at 92, but I get out at 90. Trying to time the low here. I know there's flushes. It's bound to be a flushy ticker. It's already flushed like 50 cents on a $3 stock, or 60 cents. So definitely want to be careful. Don't want to let the dips get too far away, or, you know, to get too far away from me, because it could be really deadly. So I'm really quick to cut any trades that don't immediately work in my favor. But here I found at this one, the reason I held on to this one was because we started forming the bottoming tail. So we broke down, you know, we're in key areas. It's also, you have to remember, we're in key areas. We just retested the high of day, and now we're pulling back. We're pulling back previous pre-market highs. And, you know, if there's buyers looking to get in for a breakout, you know, this is going to be a good area where they want to get in. So, you know, I put in a starter there for 1,000 shares, and, you know, I'm just kind of want to see what it does. I got in at 81. I'm immediate in profit of 80 to 84, which is already a good sign. I see the bottoming tail, and I'm like, all right, this could be it. This could be the start of a breakout here of $3. So I added there at 84, and my stop is break even. So now my cost basis is 283. So my stop is, you know, 82, 81, the low of this candle. You know, unless this shouldn't start to come back down to the low end of this candle unless it's weak. So if I see this, I definitely want to hold on to this. So it looks like I took half off for pretty much break even. So, and then I get back in there at 85. So I looks like it hesitated and came down a little bit. So I did cover or sell half my position for break even just to manage risk. But then I immediately saw buying back come back in. So I got back in at 85. So I pretty much sold my position at 85 and then bought back a couple seconds later as I saw some green on the tape. And then I added even more at 89. So I'm in 3,000 shares at for my average price of 285. And there's 291, 290. Okay, it's not as strong as I thought, so I'm taking 1,000 shares off. It comes back down, took off another 1,000 at 89, so that part was break even. But still holding 1,000 here. Looks like maybe I pulled out $100 so far in that trade. I'm still holding unrealized $70 in profit. Whoops. What happened here? Okay. Yeah, so then we reclaimed to the upper end of that candle and I just took the profit. And now here I'm up, to 435. So that was a decent sequence of trading there in that pullback. I think I made about $175 or so in that small little dip, which is pretty good. I was expecting more of a breakout, but again, like, this market is not hot, so like I'm not giving it too much time at the highs. I'm not giving it room at the highs because the consequences could be deadly. The consequences could be deadly. If I give it too much time at the highs, in a blink of an eye, in a flash, I could be down 10, 15 cents when it's not even a hot market. So I've been really kind of focusing more on the dips than the breakouts in the slower market. But, this did end up failing, and that's, again, why we don't hold and hope, because, it looked great, holding this dip. I could have been one of those guys who were just, bought 3,000 shares and like, all right, it's either breaking 3 or I'm selling for a fat loss. And, I would have ended up selling for a fat loss. And a lot of times when it breaks, once you wait for the stock to break support, it's already too late. And you're already, if you sell market, you're getting filled at the low end, at the bottom tick of the flush. So that's why you have to be out before it starts to flush. So, a lot of people was like, okay, I'll have a mental stop here at 280 or 279 at the low of the candle. But really, if you wait for it to get to 279, it's going to flash right down here to 268. You're going to be taking a bigger loss. Which is why, some people end up not really managing risk appropriately, not managing it effectively. Ideally, you want to anticipate. You want to anticipate if it's going to break through. A lot of the times I see it test a support level, and if I'm holding and seeing if the support level is going to hold, but I see the support level start to get chipped away, that's why I will sell into that support level for liquidity purposes, so I'm not getting bottom ticked. But then again, if it does hold, if the tape changes and it does hold and I see green going in on the tape, I can always get back in. But I do avoid that possibility of that 10 or 15 cent flash, which I want to avoid. But yeah, it did look good here, retesting highs, increasing volume, high or low here for rip through 3, but just not that market. It's just not that market. And if I would have held that, I could have been down 20 cents on 3,000 shares, and that's $600. It's a $600 loss. But yeah, that's a good reason how I'm able to avoid a lot of big losing trades, because I'm very quick at cutting. And, naturally, some of those losses that I do cut turn into winners, but my statistics are showing I'm net positive on those tickers or those trades that I cut. There's more of those trades that I cut. More of those trades that I cut end up going further, going deeper into the red than the ones that actually curl up and be a green trade. And if they do curl up, I'm always getting back in. So, I have very little downside of cutting my losers quick. or cutting my losers if something doesn't feel right. If something comes in on the level 2 that just spooks me, it's just like I don't like it, I'm immediately out. I'm not giving it a chance. If there's something on the tape that I don't like, I'm immediately out. I don't like it. If I don't like it, if there's something feels off, I'm out. I'm not hoping, I'm not waiting. It's like, unless it's A+, unless the trade is absolutely speaking to me, I'm usually getting out and waiting for that time, that opportunity, that split second where I'm more convinced that the setup will work. I'm not like thinking like, oh, I just saw a lot of red go on a tape, let's give it some time and hopefully the support can hold. No, I see red coming in on the tape, I'm out. I'm out of there. I don't want to be the guy holding into a flash down. That's why my average losing hold time, past couple of days, my average loss duration is 1 second. So literally I'm giving my losses 1 second to work. If it doesn't work in 1 second, I'm out. My winners are 3 times my average loss. My average hold time is 3 times bigger for my winners than my losers, which is a lot. That's 300% longer of a hold time. That's actually huge in comparison. And that obviously comes with experience. I don't expect beginner traders to, have that experience or knowledge base to understand which trades to hold, which setups to hold, and which to cut. That does come with experience, but that's something that you can look for to recognize if you are improving. Because if you are improving, you'll be able to recognize the specific setups that you do well and that are likely to reward you with profit. And on those, naturally, you want to hold them longer. You're going to want to hold them longer, and that's you, improving and being more knowledgeable about your style of trading. And obviously, the setups that you don't like, or the areas where you know that the trade may fail, getting out faster, and that comes with experience. But when you see the statistics start to change a little bit, it's definitely confirmation that you are on the right path and that you are improving as a trader. But yeah, that's it with today. Really, I'm up after commissions or after fees to 428. Average position cost 2,111, which is okay. Which is okay for a slow day. I don't want that any lower, but I can definitely understand why it's not higher, because my conviction is pretty low the past couple of days because of the slower market. Largest winner is 4 times my largest loser today, which is great. Average winner is pretty much double my average loser. So all looking good here. Decent profit margin, 54%. And accuracy is good, 56%. So, very good. I can't really complain too much about the statistics. And I felt like I did the best with what I had today. Definitely feel like I did the best with what I had today. Here's my profit curve on the day as well. So, didn't give too much off the highs. And I don't really feel like I left profit on the table, even though IBIO continued ripping. For my sanity and my mental health, it's probably best that I did walk away when I did. So, no regrets. Hopefully you guys got green today. Still trudging through that slow market, but it's going to turn around. It's definitely going to turn around. It always does. So hopefully you guys got green. Make sure you're managing your risk, not giving back too much profits. You don't want to lose more than one average green day and any particular red day. And ideally, you want to keep it to 25% or 50% of your average green day, because that'll give you more longevity, and you'll be able to hold on to more profits. And in the long run, you'll be more profitable. So hopefully you guys are doing well. And if you guys are still watching, hit that thumbs up button for me on the way out. If you're new, consider subscribing. I'd love to have you in the community. Check out the links down in the description, and I'll catch you guys tomorrow. All right, peace.